Hello friends, I hope you are safe and well. Last lectures we have discussed about the income from other sources. Now today we are going to learn some further treatments, further sections. Now one of the important chapter or module in our syllabus, that is deduction, and it is very important. Chapter 6A of the Income Tax Act 1961 provides for certain deductions to be made in computing the total income. The deductions are to be made from gross total income. These deductions are in respect of the various payments or incomes of the assessee. The basic purpose of the deduction is to encourage savings and increase contribution to national funds, which is utilized for the national cause. Now it becomes necessary to understand the distinguish between deductions and income exempt from tax. The income exempt from tax does not form part of total income, whereas deductions are allowed from gross total income in order to arrive at the taxable income. At the first instance, the assessee is required to classify and compute the income under the different heads of income. As we discussed earlier, there are total five heads of incomes: income from salaries, income from house properties, profits and gains from business and professions, capital gain, and income from other sources. This five heads total, that is called as a gross total income. The net income chargeable to tax under the different heads of income must be ascertained and taking into consideration the item of income under that particular head, and the deduction therefore from certain amount which are allowed to be deducted under the relevant heads. Thus, the net income chargeable to tax is ascertained under the different heads of incomes, and such when such ascertained incomes are aggregate, the total is known as total five heads is known as gross total income. And this gross total income does not include the income which are totally exempt from tax, as we discussed under section 10 in our previous chapters. After the gross total income is ascertained, the assessee has to determine net total income chargeable to tax. For the purpose of ascertaining the net total income, one has to take into consideration the deductions which are specified under chapter 6A, which is allowed as a deduction from gross total income. The assessee is required to pay the taxes on such net taxable income. Now friends, in this particular chapter we will be discussing the various provisions in respect of deductions as specified under section 80, and we will study this particular chapter in the following manners. Let us discuss the chapter deduction. Deduction under chapter 6A. Deduction under chapter 6A. This is very important for exam point of view. Now, deduction under chapter 6A provides the various kinds of deductions. Now, what kinds of deductions are there that we are going to learn? The total income of an assessee is to be computed after making deductions permissible under section 80C to 80U. However, the aggregate amount of deduction cannot exceed the gross total income. Now, this term is very important. Whenever the gross total income we will calculate, and then after that we will give the deduction. This deductions amount, it is not more than the gross total income. No deduction from certain incomes, for example long-term capital gain and short-term capital gain. These two gains or two incomes we will not consider while calculating the deductions and the net taxable income. Winning from lotteries, races as referred, we will not consider. Sections we will ignore now. This is not included in TYBCom syllabus. Then friends, first deduction that we are going to learn, that is deduction in respect of savings and payments under section 80C. Under section 80C, deduction in respect of savings and payment. In particular financial year, assessee earn the income. From such income, certain amount of portion assessee saved and certain amount of payment assessee has been made. From such savings and from this payments, Income Tax Act allowed certain amount of deduction. So this deduction is available only to an individual or a Hindu undivided family form. Now friends, if the saving is there, if the payment is there, so saving, it doesn't means you have to keep your money in your cupboard or in your tizori. You have to invest this particular money in various kinds of investments are there that we are going to see. If you are investing your money in a particular company, particular corporation, and it is utilized for a future purpose, it is benefited for your future, so it will be eligible for deduction under section 80C. Now friends, we have to study the list of the savings, investments and the payments. Specified saving qualified for deduction under section 80C. It means if you want the deductions from your taxes, you should invest in this particular following 24 items where you have to invest, then deduction is available. Life insurance premium paid, non-commutable deferred annuity by government, contribution to statutory provident fund 1925, contribution to public provident fund, contribution to recognized provident fund, contribution to superannuation fund, post office cumulative term deposit, NSS, it means National Saving Scheme. National Saving Scheme 8 issue. ULIP of UTI, it means Unit Linked Insurance Plan of Unit Trust of India. Then 12th number, Unit Linked Insurance Plan of LIC, Annual Plan, Jeevan Dhara and Jeevan Akshay policies of the LIC, Equity Linked Saving Scheme of any mutual fund, Notified Pension Fund, Deposit Scheme of NHB, National Housing Board, Housing Finance Deposit, Tuition Fee Paid, any two children, New House, Infrastructure, Debentures and Shares, Infrastructure Units, 5 Term Deposit with Scheduled Bank, Senior Citizen Savings Scheme, Post Office 5-year term time deposit scheme. So these are the investments, these are the qualified investments. If the assessee has invested in this particular 24 items, then deduction is eligible. Now we have to study the how much amount of investment assessee has to make. The amount of deduction, actual amount of investment, actual amount of money invested or paid, or rupees 1,50,000, whichever is less. So these are 80C's deduction. Now next deduction, 80CCC, deduction in respect of contribution to certain pension fund. This deduction is available to an individual only where an assessee has paid or deposit in the previous year any sum out of his income under an annuity plan of LIC or any other insurance company. Insurer for receiving pension from the fund set up by the said corporation will be allowed as a deduction. So 80C's deduction, it is allowable for individual assessee. It is not applicable for HF. If the assessee is doing job or business and he has invested certain amount of money regularly in pension fund for their future benefit, so this deduction is available. Now amount of deduction is amount of deduction, actual amount paid or deposited, or rupees 1,50,000, whichever is less. Next, deduction in respect of medical insurance prima under section 80D. It means if you take medical insurance policy and if you pay the premium amount is eligible for deduction under section 80D. Now this deduction is available to an individual, an HAF, body of individual, or association of person, where an assessee has paid or deposited in the previous year any sum out of his income under insurance of the health of the assessee or his family. Now what do you mean by family? Family means the spouse. Spouse means marriage partner, either husband or wife, and dependent children of the assessee or dependent parents. It means if you take the insurance policy of your family members, those who are depend on you, your children, your parents, then these members also eligible for 80D's deduction. You should pay this amount by check only. Now, deduction for expenditure also. Under ATD, not only pay insurance premium, but if you do the payment for health checkup, then also health checkup expenses also consider under ATD. The above deduction can also include any payment made by the assessee on account of preventive health checkup. Now, whose preventive health checkup? Of self, spouse, dependent children, and dependent parents during the previous year. The deductions on account of expenditure on preventive health checkup shall not exceed in the aggregate rupees 5,000. It means preventive health checkup you can do with your family. It should not be more than rupees 5,000. The payment of the expenditure on preventive health checkup you can do by cash payment also. Any kind of payment you can do. This 5,000 amount is eligible for deduction. Suppose if I suffering certain medical issue, and if I take do the blood test, urine test, the water amount of expenses incurred for blood test or x-ray, then sonography, sometime if I suffering the abdomen problem and I want to do the sonography, the sonography test, sometime in endoscopy, colonoscopy, there are CT scan. These are the number of tests are there, and if you do in this particular previous year, if you or your spouse or dependent children and parents, but it should not be more than 5,000. This amount is eligible for ATD's deduction with a medical insurance premium also. Now, amount of deduction for ordinary assessee, actual amount paid or deposited, or rupees 25,000, whichever is less. If the senior citizen is there, senior citizen means those person who reach 60 years and above is called senior citizen. The amount of deduction for such condition, actual amount deposited or paid, or rupees 50,000, whichever is less. So ATD we have completed. We have completed ATC, ATCCC and ATD. Now we will move further. Let us discuss next. Section ATDD, deduction in respect of maintenance, including medical treatment of a dependent who is a person with the disability. Now friends, you know that in our family, our relative suffer certain problem, and regularly we have to spend certain amount of money on this particular dependent person. Now dependent relative means what? See the fourth number. Dependent means spouse, relative. Dependent relative means children, parents, brothers and sisters. And this deduction is available to individual resident or HUF. And assessee has incurred the expenditure for medical treatment like nursing, training, rehabilitations of a dependent being person disabled. So such kinds of dependent relatives, if you are deposited under any particular scheme of the LIC or other insurance, then it is also accepted. Now amount of deduction, it is a fixed amount of deduction, that is 75,000. We will not consider the water amount spent. We will directly give the straightforward 75,000 if the problem says that the assess's relative, dependent relative suffer problem, and we have to make certain expenses. On such condition we have to give the 75,000. Now the person who suffer dependent relative suffer severe disability. Severe disability means what? 80% or more disability. There are number of disabilities are there: autisms, cerebral palsy, mental retardation, multiple disability, and blindness. These are the disabilities are there, and it is severe. Severe means major disability. More than 80% disability is there. That time amount of deduction is 1,25,000. If the disability is less than 80,000, then we have to give 75,000 as a deduction. 40% above and 80% below. 40% above disability and 80% below disability, we have to give the deduction 75,000. If the disability is more than 80%, we should give the deduction rupees 1,25,000. Next, deduction in respect of the interest on loan taken for higher education under section 80E. Now friends, what happened? We will borrow the loan from financial institutions for education purpose. Education for yourself. I himself borrow the loan for my education. Sometimes spouse education, sometimes children's education, and such loan for higher education. Higher education means what? If you pass 12th standard exam and if you go for FY university level exams, FYBCom, SYBCom, TYBCom, Mcom, so it is called as a higher education. And amount of deduction, whatever amount of interest on such loan paid, this amount is considered as a amount of deduction. Now deduction in respect of interest on saving, section 80 TTA. If you are deposited any amount, on saving account or post office saving account, and you will get the interest, so whatever interest you will get, it is taxable under the head income from other sources. But we have to give deduction on interest on saving account, and it is up to 10,000. It is up to 10,000. So 80 TTA's deduction in respect of the saving, and amount of deduction is up to rupees 10,000. It means if you earn the interest more than 10,000, then it is taxable. Deduction in respect of the person with the disability. It means assessee suffering the disability, and he is a individual resident of the India. He is suffering the disability, and it is certified by the medical practitioner. The amount of deduction is 75,000. If he has suffering the severe disability, it is more than 80% disability, then amount of deduction is 1,25,000. This particular things we have to consider while studying the TYBCom semester 5th. Deductions are there: 80C, 80CCC, 80D, 80DD, 80TTA, 80E, and 80U. There are total 7 deductions in your syllabus. We studied today, and then after that, next video we will discuss the various kinds of problem, how to compute the taxable income of an assessee. I hope you understood the various deductions. You should study regularly, and it is also very important for your study purpose. We will discuss the practical part also.